Hey, okay, my microphone is working. Alright, let me check YouTube here. See if everything's running smoothly. Looks like it is. Let me quickly share everything on Discord. Disable. Start the Discord stage. And make sure we start sharing. I made a mistake here. I have to modify the settings, permissions, everyone. Connect, save changes. Francie, you got lucky because you joined so quickly. It was not intended to be open to everyone on Discord, so let's make sure everything is set up correctly. I have my monitors ready. All right, I think that's gonna do fine. Where are we at right now? So after the Asia kill zone, where we consolidated right at the high, leaving behind some SMT divergence between ES and NQ. I'm just not drawing it up because you might confuse it with this overall trend line right here. I'd really be looking forward to a collapse back below Monday's low. Of course, part of me is also looking, good morning Foiko, good afternoon, is looking for the reversal above each and every one of these lower highs that we have left behind. But I don't know, I've seen this too often where New York opens up and we just collapse below the previous day's low. So I'm monitoring this very closely. I have standard deviations of the entire Asia kill zone. So far these levels have been respected. We had the -1, we consolidate. Let me actually turn off the Discord noise. We had -2 standard deviations to the tick right here. We consolidate before we break down to the next level, which would be -3. Now we're down to -4 almost. We'll see. We just kept on going lower. This morning we took a London session trade, right? Where was it? Right here. We tried to long. It failed. We looked at the unicorn setup, but it's outside the kill zone, so we weren't really interested in it. But eventually it would have played out with some drawdown. So we have these equal highs here. Basically 3 relative equal highs. This buy side right here could now also use this lower high as a new potential buy side target. And other than that, sell side below the 50% of yesterday's range, the previous week, and Friday's high right here. But other than that, we have FOMC meeting minutes later at 2 p.m. So I will be rather careful today with my trades. We have this overall trend line, which would be an invitation for a potential low resistance liquidity run to quickly sweep out all these highs. Inventory right now is short. I think that's pretty obvious too. Most of the traders are short in short positions. Well, how do we gonna get rid of them? Well, with a quick and sudden move to the upside. Let's take a look at EU. EU really not in its best shape. Just consolidating here. I'm not really interested in that today. Take a look at NQ. NQ already hit that sell side below the low. while on ES we didn't. During the London live stream, we spoke about the perfect 2022 model we saw today on NQ. We took out the previous day's high. We have SMT divergence with ES, creating a higher high. Nice Asia trend. We shift structure, hold resistance on a breaker, paired with a bearish share value gap, forming the high of the day. And from here on, we just, buy model. That's the buy side of the curve. And now we have the sell side of the curve. From where I wouldn't really be surprised if we're just gonna collapse at the 930 open. We will see though. Can also look at the 50% of yesterday's range. See if we have anything aligning. 50% coming in right here at roughly the 1600, 15977.5. So overall, a very steady downtrend here. Kept on going lower, pretty much respecting each and every single one of the fair value gaps that we have left behind on the 15 minute. Tiny little 15 minute, but we respected it. Continued lower, new 15 minute, we continued lower. Let's see if we hit that sell side before market open. It's 9 AM, so it's a new hourly candle. We close below the 1 hour bullish fair value gap right here. The highest 1 hour fair value gap we have on our chart. We also see the lack of volume that has been traded inside this range from yesterday. So we just cut right through that, open up with a bearish volume imbalance on the new hourly candle and continue lower. Definitely closing below the 50%. And also what's becoming pretty obvious is that we don't leave behind new bearish fair value gaps on the move to the downside. We have SMT divergence at the high. Keep in mind what we did yesterday on the higher time frame. Let me put all these and take group quickly. And go to the daily time frame. We had pretty significant levels yesterday. Let me turn on the main daily. So right now we basically hit the high from the 15th of September. We closed above the 4-hour bearish share value gap. We also closed back above our bearish share value gap that has been used as resistance once. So now initially I looked for some support around that area during London. Didn't end up holding up. But we will see what we get for New York. We have the consequent encouragement of the 4-hour. And right here we saw that SMT divergence between ES and NQ. And actually if we take a look at the daily NQ chart. Main daily, whoa. Go to the daily. We can see that NQ formed a new high for the year of 2023. So the tech stocks seem to be, or at least major ones, really bullish because we took out this high. And what do we expect after something like this happening? Yeah, of course, we kind of would expect a tiny bit of a retracement at least. We leave behind SMT divergence right at this extreme point. Inside the daily bearish share value gap. Not super far away from the all-time high right here at 16,700. Well, I guess it depends of if you view your chart with contract changes on or not. With it off, we took out the high. With it on, like I usually have it, we only took out this buy side. Interesting. But if we look at the December contract on NQ said, we didn't take it out because, yeah, it's not adjusting for contract changes. So I would stick to that. Leave contract adjustments on a continuous contract at least. All right. volume imbalance here on the daily, and we see we touched it. And if we go to the 5-minute time frame, even shows more confluence. We took our daily buy side yesterday already. On Monday, we retrace, do some short covering, and then during Asia, new day opening gap, we keep on trending further to the upside. If we would draw some sort of a trend line, that also would play into the overall picture. We take out the previous day's high, hit the daily volume imbalance. During Asia, we shift structure, break our trend line, hold resistance on the bearish fair value gap, and continue lower. So whether you use a trend line to take your trades, fair value gaps, or yeah, basically ICT concepts, I'd say that trend line would have been fairly obvious. Trade a failed breakout. We keep on holding support, 1, 2, 3, 4, 5 touches. We break below and continue to sell off from there. So let's see it, drop it back down to our 15-minute. Looking at our daily analysis, we already dropped below our daily inversion. We closed below that, opened below it at 8:30, continued lower and filled this entire PM session inefficiency. If we take a close look at that and hide our main daily, turning on our group 1, we filled in this entire 5-minute fair value gap or 15-minute fair value gap. It's still 9 AM here on the 15, on the 5-minute time frame. Well, I'm not going to look forward to take a market structure shift long before the market open. I think that really wouldn't make a lot of sense. Because right here we're still kind of in the middle of nowhere. I would like to see this low being taken first before I go long. Otherwise, yeah, I don't know, there's just too much room to the downside. Yes, we could call this a market structure shift, and it also is one. But lower high, lower low, lower low, higher high. Let's see if we can close above that. But still, like I said, the textbook setup, if you want to print something out and hang it in front of you, would be right here. 5-minute time frame, Asia session, taking out the previous day's high, hitting a daily high or higher time frame point of interest, that daily volume imbalance. We shift structure, we break a trend line. We're above the midnight level because it's Asia, actually hasn't even been formed at that time. We keep on holding perfect resistance on the breaker right here. We don't even close above the breaker, so we perfectly resist at the low. We form a nice higher high, taking out the previous day's high, a higher low, a higher high, and we break structure with a aggression to it. That's also what we want to see. We get our entry around a new hourly opening. It's 10:50 PM. Slowly retrace, wicks to the upside, pin bar to the downside, continuation lower. Even if you missed that, bounce off the VWAP, reject. Where's that line coming? Ah, that's a daily buy side, I remember. And we continue lower from there. Even during London, we made it look like it's gonna go long. Nope, we just continued lower. All right, let's go back to ES. So just, common sense thinking. Who's in the money right now? Shorts or longs? Just looking at today, I'd say it's pretty obvious to say shorts are in the money. Everyone that entered short today at any given point in time, maybe not right at the opening, but even then, just holding a little bit from the open, that would have been 5 points or 5.5 points drawdown. And so far we dropped 14.75 points. The regular trading hours opening gap, let's check that out. Price at the moment, we closed. Settlement price, let me actually look for the settlement price here on the daily. Monday closed all the way up here. So that's our settlement for the daily candle. Turn that off. 15-minute time frame. Regular trading hours. And right now we're around... Where's price at right now? Somewhere down here. So we leave behind a gap potentially if the market opens up. Keep in mind we have FOMC minute news at 2 p.m. Settlement price, that's where we're at right now. So we would have the potential for a gap. Anyway, let's see if we have any questions. I saw that Kohyu asked something in the VIP chat, maybe posting trades, a quick video on one good trade and one bad trade each week, following your rules, kind of taking us through your trade review. Well, am I not doing that with the daily live streams? Please give me some feedback. I mean, that's the only thing for me that I can get to actually improve the quality of the live streams and, yeah, for all the members. Otherwise, if no one's ever giving me some criticism or feedback, how should I improve? I would assume everyone's, yeah, happy. So please tell me. We hit the 15-minute bearish, the 8:30 a.m. bearish value gap, and reject that. Just looking to get a feeling of the market right now, getting a feeling for it before, and instead of just jumping on at 9:30. Warming up, I'd call that. Looking at a few things that played out so far today, but other than simply selling off, we didn't see that much. Like I said, we had that perfect textbook setup at the high. I also shared it on Discord. Would be the perfect example. I think I shared it in tape reading, VIP chat, trade ideas, no, general chat. Good morning, IKEA boy. Let me start a thread right here. And right in here, create thread. Put the image in here, so we start some sort of a collection of perfect 2022 reversal setup once we see them. I hope that helps. Yeah, of course. People are for different reasons in the group. To learn something. I mean, yeah, it makes perfect sense what you say here. Still doing my own trades, but the tapering is really an eye-opener. That's the feedback I got, and that's how I was able to tell that, okay, more people are interested in the tape reading. I mean, I can still do the 2022 model. Thanks for the feedback. All right. Friday's high, we have that on our charts. We have the retracement of our entire daily candle on our chart. There's really not much more we could be looking for. 50% to continue higher. Inversion fair value gap, but this used to be an inversion fair value gap before. I think that's a little bit far stretched for my liking. New week opening gaps also not really. Let's check out the weekly. We have more objectives to the upside on the weekly if we're really being honest. So of course we could retrace, no questions asked. I mean, we had 1, 2, 3 super bullish weeks. We expanded a total of, let me measure it from the low. I count this low because we had a new week opening gap right here of 11%. Last time we had a rally of 11% measured from a low. Right here that would be 8% on the weekly time frame, just 4 consecutive candles. It's pretty rare. Last time maybe here, yeah, 18% all the way to the high. And then what happened? Everyone thought the bear market is over, bullish market structure shift, and we yet continue to make longs pay for the short. A bottom doesn't form so quickly within 1, 2, 3, 4, 5 weeks. Right here, we spend some more time around that bottom. We don't just jump up within 3 or 4 weeks. But I mean, I like the level we respected or we bounced from. Already spoke about that on the weekly outlook. If I look at the main fibs, why won't they show? There they are. So right here from the all-time high to the potential bear market low, 50% comes in right here. We kept on holding resistance here, consolidated before we broke above. And note actually, how did we get above the 50%? With a gap. We continue up higher. We measure from our high all the way to the low. And our 50% for that range perfectly comes in at 4173. We take a look below the sell side liquidity and immediately reject to the upside here on the weekly. We negated the inversion or the bearish fair value gap. Next buy side really on the weekly even would be 4595. That's 50 points away. Before we take that monthly buy side right here, August buy side and September buy side. It's all I'm still looking for, but well, at the same time, scalping on the lower time frames, we have to be adaptive. If we can't recognize change and we're too slow on that, we miss the opportunity. Change always presents an opportunity as lower time frame traders. Let me take a look at EU. Well, EU has really not been gentle today. These relative equal highs should be hit though. It would really surprise me. I mean, yeah, we rejected from it, getting really close to it, not super far away, only like 30 pips. But we keep on pushing, which is a good sign. We closed above the 15-minute bearish share value gap. We took out the low of the day, did we? 18, yeah, we took that out, filled the new day opening gap. Just not making it really easy. Right here, I mean, I get why you tried too long. I mean, depends where you got in, maybe on a 5-minute market structure shift down here, on the overall lower low, lower high, lower low market structure shift right here. I mean, the stops down here should have been fine. And we keep on continuing higher. This happened at 8:30. We likely got some news on the euro at 8:30. Let me take a look. Right now I'm looking for nothing. I could frame both, knowing that everyone who traded today, if they went short, they made a right decision. Let me take a look at EU here. European news. Apply fit Tuesday. No, not really. Interesting. We have the EZB president speaking at 11 a.m. due to speak at an event hosted by the German Ministry of Finance in Berlin. Volatility is often experienced. All right. But other than that, the main focus is on the FOMC meeting minutes where they discuss what happened during the last FOMC interest rate decision, where they decided to not increase or cut rates. They stayed flat, I think, if I'm correct. Maybe that's the last time. Maybe they also decreased. Anyway, they discuss it, look forward, and give a statement on that at 2 p.m. We already saw a major rally. Yeah, EU is looking nice. Still above the previous day's high. Likely just making it super hard on traders to like, let's sell it, reject off the midnight level once more. Like, see how perfectly we respected it here on the 15. So once we close above that, we should really have smooth sailing above the high. Can take a look at the DXY as well. We took out September lows. Now the next sell side target would be below here. We already hit the 50%. We've been speaking about this for a pretty long time now. 50% of this entire very strong move to the upside. Here with SMT divergence, CPI fair value gap, rejected, hit the 50%. We spoke about this happening on the weekly outlook as well, seeing that we closed below the 50%. We retested and continued lower. Now we hit September lows. Not looking on a lower time frame though on the DXY. I don't think it helping me at all. So let's see, 3 more minutes on EU before we close. Take a look at ES. It's 9:25. In 3 minutes we get the market open. Take a quick look at NQ. Wait for potential SMT divergence. So overall, I've been asked the question if I'm looking for longs or short. Right now, I would wait for the market to show its hand. And then look for a quick scalp. Done for the day. And leave it at that. See what happens at the FOMC meeting minutes at 2 p.m. Where did it go? Oh, my intraday analysis has to be turned on. But you get the idea. So if the market opens up, imagine I ask the question, okay, where's the money at? Well, the money is sitting above each and every single one of these highs. If you got short, let's say right around the London Open on a 15-minute bearish share value gap, and you suspect that we're gonna completely get rid of this entire rally, well, before we do that, the money right now for this current day is sitting above these highs. It's not very hard to tell. The entire day, since 2 a.m., we spoke about that on the London live stream. where we had that perfect rejection of the midnight and the VWAP. Not saying that I'm gonna place a limit order here, but once I see the reaction of this area, that's when I can enter with the market, targeting lower prices. We hit to the tick 4 standard deviations of our Asia range, so just also want to point that out. Right here, 4 standard deviations at 4547. Right down here we have 4545.5. That's the 50% of yesterday's range. And overall sell side down here, which hasn't been taken yet, which really is the closest sell side on the 5-minute time frame until we reach that area. So 20 seconds before market open, in the middle of nowhere, comparing that to yesterday where we actually tried to long the open, new week opening, gap, market structure shift and all that. Today it's a little bit harder, I'd say. So we're just gonna react to what the market has to offer. But the entire day we spent below the VWAP. Alright, the market opened up. Take a look at NQ here and watch the market open on both charts. NQ showing some weakness right at the open, while ES showed some strength, took out buy side. NQ made a lower low. ES is still hanging around in there, in that little range right here at the low. But that's where it's hard to say longs or shorts. I mean, we could flip a coin and decide, but overall, no point in guessing. We're not in the 50-50 business. At least I am not. NQ really showing some weakness here. It keeps on selling off, while ES is still lagging behind. Let's watch it on a 1-minute time frame. So we swept the high, swept the low. Let's just wait and see what that first 5-minute candle will do with price. And from there we take it forward. Open up the chat. Rejected once more of that midnight level. So right now SMT divergence is there, but it's not confirmed yet. All that needs to happen is for ES to break lower, like NQ did. Right here, let's see if NQ hit any interesting areas. Or previous day's range. Almost hit the 50% of that. Man, that would have been a great Asia short. And right here during the London Open, see what we got. Consolidation until we broke lower, almost at the end of the London kill zone. This is the entire London kill zone range right here. Not much if you look at the bigger picture. You wouldn't suspect London to be right here. if you couldn't tell time. 9:30, 1.5 minutes to go. Swept both the low and the high. And Q started to reject a little bit more strongly, so we can keep an eye on that, and especially that bearish fair value gap. Look at the 50% of that, because that's what we could call a Judas swing. Strong one-sided move. If we close above that, we could use that as potential support. I'd use one of the new 25k accounts I picked up to try that. Watch the 1 minute right here. Yeah, necessarily not looking clean compared to that. And we would have the SMT divergence here on NQ. Let's see if we get to close above. We do. Come on, I was too small. I was too slow. I was about to enter with 5 contracts, but that was a little bit too much for my liking. So let's enter with one right here and another one right there. See how that goes. So we closed above. We could label this as an inversion. We target buy side above. Okay, we filled on both contracts. While ES is still chopping. That's the inversion model basically from that dodgy guy. Maybe you've seen him on Twitter. Close above. Let's see how well that works out. Right with the New York Open. We keep on digging into it, and every time we dig into it, we end up holding support. So I like that. Yes, right now it's just chopping. Nothing clear at all. Didn't take out the low. That's why I prefer NQ, because we have that SMT divergence right here at the low. We negated the bearish share value gap at 9:30, so now I'm looking forward to see support here. If I see we close back below the 50%, I take off a contract. Because then that idea would kind of be invalidated. Make sure I'm on the correct account. Yep, I am. Let's check out the 1 minute time frame here on ES. No price action, no fair value gap yet. Not worth looking at that right now. One, if we can hold that 50%. Seems like we do. Let me hide these executions. They're just messing it up. Okay, so we closed below. I'm gonna get rid of one, and now I'm short with one. That was terrible execution from my side. Not used to how quick NQ actually moves. So let me get out of that. Let's see how much we actually lost. More than 500. That's terrible. What's that? Sterlina dollar. Not sure what that is. Sterlina. And we end up keeping holding, man. Fucking hell. Let's just try it. I don't worry about that 90% Apex account. We still ended up seeing support from that area where we wanted to see support. I guess I just can't be too precise with NQ because it has these small decimals. The overall idea that we hold support right here still holds up. Let's see how far we can take this. Yes, no, also took the low and is starting to reject. But still nothing to base a trade off. God damn it. Terrible execution from my side. That's GBP USD. Well, it's a reversal setup, but I wouldn't call it a 2022 model. Where's the market structure shift for that? Kind of lacking the market structure shift there. Kind of. Did we end up taking buy side? Yeah, we did. Should have had a partial here. EU, man. Rejected after midnight again. So after orders move to the downside, New York opens up and we just chop, for now at least, on ES. While on NQ we have some decency. We have that inversion fair value gap where we base the initial trade off, but unfortunately got stopped out right here. Check out the 5-minute time frame here on NQ. Yeah. Also just messy wicks out to the downside and both the upside. If we get back below the slow, I'm gonna get out of this position, and that 25k count is pretty much done and over. So now ES took that 9-10 a.m. high and that low, but nothing. We didn't take a trade on the challenge yet. There's no setup. Didn't miss anything at all. I'm just trading one of the Apex 25k accounts I picked up for $10 or something. Trading one of them on NQ right now. Using the inversion fair value gap setup at the low of the day. See if it wants to hold support. Already got stopped out down here, but that's not my funded account. I wouldn't risk that on my funded account. That's more something I don't know, I do with these $10 accounts. If you have a decent setup and you get lucky and not super unlucky like I did right here, you end up passing that challenge in one day, you do micros on the other day, and you just add some more money to your funded capital. But how did you lost? Because I'm trading NQ, and NQ is pretty volatile. And I'm playing with minis on NQ. It's not on ES. You see that? NQ1 and ES1. Because I like the setup a little bit more. Let's take a look at the 1 minute here on ES. Still chopping around. No fair value gaps since 9:30. Not a great sign. So what we're sitting at? We're sitting at 24,500. The stop out is at 23,500. So I basically have a grand to lose from where we are at right now. Down 500 on that 25k account. Yeah, nothing on the trade day challenge. I would just, I don't know, do this on if you're confident enough in your setups on these 90% Apex offers. I mean, we usually spend $10 worse. Once you got them funded and you actually hook them up to your trade copier system whatsoever, well, I wouldn't do it like that, that's for sure. But you get the idea. EU rejected strongly. Also still in that shop without any proper trend today. I mean, yeah, kind of Asia trend, London reversal, chop. Chop, chop, chop. Yes, so far for the 9:30 open also hasn't presented anything, while NQ did. Formed the SMT divergence. Went above the bearish fair value gap, holding support so far. We didn't close below it. But it could still, of course, fail, and that challenge is gone. But, well, not really feeling a need to execute on my funded, at least right now. I mean, look at this. We have FOMC meeting minutes at 2 p.m. So I'm in no hurry. Yesterday was a good trading day. We caught in a total of 12 points. 8 points of them on the live stream, belong into the previous day and previous week's high. Okay, we closed below, so I'm already stopped out. Let's see, how much do I have left? 23. So now we have bullish SMT divergence because ES touched the 50%, while NQ didn't make that lower low. Try it one last time. Otherwise the account is just done. Yeah, 500, it's 2%, it's not too bad. And especially if you consider you don't spend too much on these accounts, so you can really use that as leverage if you think about it. And 2 out of 3, if you have a decent setup, you end up passing. Or 1 out of 3. Alright, so we hit that 50%. Alright, that account is done and over with because of the live trading drawdown, guys. Do you see that? I didn't get stopped out at 23,500. Why is that? Because with Apex, my highest account balance, unrealized, was something like, yeah, $157 in profit. That's why I got stopped out by the trailing drawdown immediately. Little learning lesson here, I guess. Yeah, you can't really base it on the day trader is right. You can't call it a 25k account because all you can lose is $1,500. So there's really not much difference of between you just putting in 1.5k for the 25k account example into your IB account or your futures account and simply using your own funds. So just following that logic, you basically have to flip your account. If you would say, okay, I'm going to deposit $1,500 into my futures account right now or into my CFD account, in order to pass the challenge with your profit target also being $1,500, well, you would have to make $1,500 in profit, which would basically be flipping your account. So while when you use Apex, you would actually only end up losing $10 if you lose the entire 1,500 like I did right here. Of course, with your own money, you really wouldn't be so reckless. But, well, at least if you pass, you doubled your money. Hope that makes sense. So the inversion fair value gap really failed here. It's okay. What's the time? It's 9:45. Check out ES here on the 1 minute. Yeah, still nothing crystal clear. So yeah, once you, I don't know, get a hang of how you like to trade, what you would like to see, testing things, then I don't know, I think it's a fair approach to just buy 3 or 4 of these Apex accounts, and even if you just pass one of them, it's still worth it, I'd say. Spend 40 bucks, let's say 50. You got one funded within a week. And if you have your approach, of course, you wouldn't keep on doing that. You also can't, because Apex has a consistency rule once you're funded. Actually, yeah, not enabling to do exactly that stuff. You have to be below a 30% consistency rule, meaning your biggest winning day can't exceed more than 30% of the requested payout amount. SMT divergence right here. Yeah, it was a good setup right for the open on NQ, expecting this kind of explosive move to the upside. But I mean, well, obviously we saw it failed. We would have hit our partial right here at 1602, 16020. Nice, you almost finished the trade day challenge, Agent Smith. Way to go. Yeah, so with trade day you cannot do what I did just here with Apex, because yeah, they actually have a consistency rule during the challenge. Afterwards, not anymore, but during the challenge they want their traders to be consistent. Meaning your biggest winning day can't make up more than, let's say, for example, 50%. If your target is $2,500, your biggest winning day can't be $2,500, because that's more than 50% of your overall profit target. Meaning you can't just hit a strike once and expect to get funded. Well, then you just have to reach a higher profit target. So let's say you hit, your target is $2,500 with trade day, and your biggest winning day is above 50%, which would be $1,250. Then you would simply have to make more until your biggest winning day. So basically, if your biggest winning day is $2,000 and your target is $2,500, for it to be for your biggest winning day at $2,000 to count as the 50% consistency rule, you would have to reach a profit target of $4,000 now. Hope that makes sense. With Apex, you don't have that. That's a cool thing. That's why you can really use it as kind of a loophole, you could almost say. Not really a loophole, because you still end up buying their product in larger quantities even. You're basically just saving some time, I'd say. But of course, I wouldn't recommend it to a beginner trader. That's why I've never shown it on stream, actually. I will stop that too. It's not a real good practice. And once you get the money, you got your payouts, you can reinvest it into more challenges to acquire more capital. That's how you can keep it coming. Let's say you make a $2,500 payout, you reinvest $1,000 into, let's say, 10 new Apex challenges. You fail 5, you win 5 with a 50% win rate. So you just take every trade with your max risk basically. Once you hit that 1-to-1, you're done. And most of the time we end up having a win rate of at least 50%. Even if it comes down to 30, we still pass 3 out of 10 accounts. Yeah, we lost $70 in the meantime. Of course, we also have to pay for the activation fee. And afterwards, you hook it up to your trade copier and let it roll. With proper risk management, of course. So we end up pushing. We have SMT divergence. We hit the 50% of yesterday's range. We didn't hit sell side yet. And right now all we do is choppy. We bounce up again, so also choppy on EU. 5-minute candle close, it's 9:50 now. Let's see, maybe we get something nice at 10 a.m. We mentioned the SMT divergence. Let's see if we have any questions maybe regarding these prop firms on YouTube. EZB, yeah, I think they're more relevant to what we, if you trade Euro US dollar heading lower today, yeah, we could see that. I mean, we've already been doing that the entire day. So a little relief run to stop out some shorts, that some pre-existing shorts wouldn't really hurt. Nasdaq is in a 4-hour fair value gap. If it gets taken out, I'm looking for sells. Seemingly putting in a nice top formation. We spoke about it. The things that we took on the daily time frame at the beginning of the stream, and especially when we spoke about the perfect Asia session high of the day 2022 model. I think so far you haven't had a single better opportunity than that one. Not on EU, not on ES, not on NQ. On NQ, yeah, but only during Asia. High of the day, beautiful setup, SMT divergence. You couldn't ask for more confluences, basically. Other than that, I mean, even here on NQ, targeting internal lows, of course. After buy side of the curve, we might be seeing the sell side of the curve now. We might be just preparing something for the FOMC meeting minutes. Who knows? I think probability to engage, at least right here until the market really has shown its hand, is not in our favor. If we close below the 4-hour, even if we close below, who gives a shit? Like, if we're engaging on a 1 to 5 minute time frame, could still get a huge pullback and stop us out, and eventually it still ends up holding unless you cover the entire 4-hour fair value gap. No, I wouldn't agree with, yeah, let's say these prime time setups, these perfect examples. I mean, last week, let me go back to last week, Thursday, Wednesday, where was it? Wednesday, and that was with PPI, so it was the week before that. Right here, Monday puts in a high, we take out Friday's high on Tuesday. Tuesday puts in a high, we take that out on Wednesday, and Thursday comes all the way back up, even already during London. So pre 9:30 open, we continue to make a higher high with this place, we fill our inefficiency, and it happens to be the high of the week. Well, let's say if we disregard Friday, because Friday did this. Many people didn't see that coming. I didn't see that coming, but we were able to get in on the inversion fair value gap right here on the unicorn setup. Bullish fair value gap to chase it long into the previous day's high. But these setups happen, and let's say you can't look at the charts all day, of course. I didn't take that Asia session setup, but I understand the high quality setup has been formed, and I'm really not here to look for something with a lower quality. As a risk manager, nice setup, 930, immediately displacement to the downside, we leave behind the inefficiency, cool. If you missed that, well, you got another opportunity here. We took out a short-term high, we displaced to the downside, we have a bearish fair value gap, and we continue lower. Would have been more something during the PM session right here, even if you would have missed that. Entering right here, what's happening here? Previous day's low and a low we retrace, that's engineering liquidity. Going short on this bearish fair value gap, yeah, your risk-reward ratio might not be ideal, but maybe just looking for a 1-to-1 or a little bit above that, but at least it's an easy draw on liquidity. That's free money laying around. Like on the New York live stream yesterday, I think it was. Where we had the long going in the, let me check, yeah, we're still doing nothing. New week opening gap, we had the long going on right here, but I closed too early because I was afraid that, yeah, well, bearish volume imbalance, close below the 50%, close below the bullish share value gap, close below the breaker block. I just had 5 things saying that we're very likely going to take the low out. Well, volatility of 930 can sometimes lead to that, but still yet we didn't fail to continue the easy continuation trade from right here with 0 ticks drawdown into the previous week's high. We have to be very quick as traders sometimes, especially when we're trading the New York kill zone with news and the 930 opening where price really moves aggressively. And then we took the short right up here. What do you expect after we sweep weekly buy side? Well, on a no news Monday, I wouldn't expect too much. We just had a major rally, but we got the fair value gap. We had our entry. Stop loss above here. Target 5 points. 2-to-1 would have been hit to the tick. More than 5 points. That's $250 with one contract. It depends on, yeah, your account size, of course. Go short with 2. If we close above, you get out. But yeah, we also had a free drive setup forming right here. We had our first push higher, second push higher, third push higher, and even a fourth push setup if we want to really look at it like that. A fourth push, we get the displacement with the inefficiency after sweeping a higher time frame point of interest twice. A little pullback is to be expected, at least some sort of pullback. Not looking for much. Make sure you get paid. Otherwise, you hit break even and you're wondering, oh man, if I would have taken a partial at least here, I would have secured 250. If the other contract is getting stopped out at break even, it doesn't matter. I got paid more than a average daily salary, I'd say, and you're done. Then we framed the inversion fair value gap, which we actually used to continue to go up higher. That was basically today's session. After that, we never got a new confirmed market structure shift. Alright, but let's check out what today is happening. That's what we're here to do. Now we have equal lows. Take a look at NQ. NQ ended up making a lower low. Check that out on a 1 minute time frame. No SMT divergence anymore. Perfect equal lows. We bounce off that 50%, wicks to the downside. We have sell side below here. We are between 4 and 5 standard deviations of our Asia session range. We have trendline liquidity above. Doesn't mean we're gonna take it, because right now all we saw is chop. Let me check out if we have something on YouTube. Nope, no questions on YouTube right now. Feel free to ask. That's what we're here for. Take a look at EU. Still struggling with that midnight level. Maybe we get the relief and go above the highs. So we're stuck between, well, kind of hard to say what we're stuck between. In between of midnight level and low of the day, I guess. We have relative equal highs above and relative equal lows below. Watch it on a 1 minute time frame. This is choppy. Compare that to yesterday market open. I always like to compare it to relatively good days where we have an easy time reading price. Even just going to the 1 minute time frame. Alright, market opens up. We bounce off the new week opening gap. Open up with our first volume imbalance right here. We have equal high buy set above and equal high buy set right here, which used to be the high of the day. We have buy set above here. We have the previous day's high and the previous week's high also above. Alright, we see right at New York Open, the market kind of showing its hand. The question is, where can we get in? Well, we can use our highest bullish fair value gap to simply chase the continuation. We got in based on the 5 minute time frame right here at this down tick. Luckily filled to the tick. Otherwise, just continuing the tape read. We put in structure in here. We have equal highs above. We take them. We have more buy side targets, previous day and previous week's high, that we want to target. So we anticipate this structure to hold. Alright, let's see what fair value gaps we can use to frame our narrative. Yesterday, I already did that. Inversion fair value gap, use to hold resistance, we close above, we retrace into it, use it as support, and continue further to the upside. In a straight line, without having the need to take out these perfect equal lows. Understanding that the market shows momentum, showed its hand right at the New York Open today. Well, still hiding its cards. And by the time it shows us its hand, it might be too late. Not too late, and in that sense that we have to FOMO in or anything. We don't do that anyway. Mm-mm-mm. 1 minute time frame. Equal highs. Still tough to frame anything here. Inversion fair value gap now being used as support. Doing this while we're still going sideways. You see how well it worked yesterday within a trend after knowing what our draw on liquidity is. A higher time frame draw on liquidity. Once we hit that area, we look for a little pullback or a short. Both of these things played out, but today I think it's fair to say that this is relatively hard to do. And it's okay to not place a trade on a specific trading day. It really is okay. Mm-mm-mm. 15-minute time frame, 1 hour time frame. Hit the volume imbalance. I think eventually it's a matter of time until we get a relief, at least to the VWAP. The question is if we move straight up into the VWAP or if we take out equal low and sell side before that. But tricky. Five-minute time frame, new candle opened up. Well, day trader, it's a valid approach, but you have to make sure you do this at a very, very specific area, because if you do that, what you said with the news, get 125k account to go long, 125k account to go short. Let's say we're right here at this level. Most of the times when we get news and we open up right here, and you one account long, one account short, your risk management has to be on point, because with Apex, it's not as simple as, well, we could get a wick and hit the stop loss and then continue lower into our take profit target. So that's one scenario you have to account for. The other scenario, so basically if the news candle opens up, our stop loss usually is, let's say, 5 points. You go in with full size and our take profit target is 5 points. If we move first, let's say to 50%, that's 2.5 points into our profit. We're already up, let's say, $1,000 and only $500 away from our profit target. All we need now is a retracement to our break-even point, and 1 point above that, and our account is already gone because of that live trading drawdown. Many scenarios you have to account for. Live trading drawdown is biggest enemy in that, so you really want to make sure you get that good entry out of a consolidation with a nice breakout where we keep on going and hit 5 points without chopping, going back to your break even, eventually stopping you out. The good entry is important. That's why I don't really like to gamble with them. You still need your good setup. I mean, today on ES, gotta be honest, I haven't seen a very clean one other than a continuation or a pullback trade, really. The easiest one, I'd say, was this rejection of the midnight level paired with the VWAP, paired with this overall trend line. Not that I'm gonna place a sell limit order here, but placing it like this, alright. Gonna go long one and short one. 5 points up, 5 points down, one of them is gonna hit. And you preferably like to do that during less volatile sessions. During New York, that's sometimes a death sentence, because we could just chop. Live trading drawdown is gonna hit your stop loss. Yeah, we can lose both at the same time. That's why I think the only valid way to do this, if you buy, let's say, 5 Apex accounts, and if you do, And if you appreciate me speaking about it and giving you advice, make sure to use the Apex the link in the description below for the Apex affiliate link. But the way I would play it, or the way I'm playing it right now, is I have 5 Apex accounts, for example, spend, let's say, $100 on them, and that allows me to take 5 trades. I do 1 account per setup I see. And ideally, that's a nice clean setup where we make a higher high, we displace, and we get our continuation lower. I'm expecting that over the next 5 trades, I'm gonna win at least 2. And by winning 2, I'm not looking for a 5 risk to reward. All I'm looking for is a healthy entry where my stop loss is roughly 5 points away. If it's more than 5 points, I'm gonna switch over to micros. So that's really where the risk management part comes in. And well, you could either try to do all accounts at once, but I don't know, I think that's the best approach to do this. And you just replicate this 5 times. And depending on your win rate, how generous the market has been, hitting your 5 points first or hitting your stop loss first, of course, you also have to plan for the scenario where we fall short of our buy side target, then reverse and we get stopped out and it actually still ends up working out. But, well, even if you just pass 2 out of these 5, you have 2 accounts, you still have to do micro executions for the next 6 days, staying above your minimum balance. Then you pay the $150 for your activation fee. Then you can do the exact same thing, but yeah, with proper risk management. Because yeah, you won't get a payout from Apex if you have one $2,000 trade and all your other days are only $1, $1, $1, $1. That doesn't line up with their consistency rule. So picking one good setup, whatever it might be, whatever you like, you feel like you have a good win rate doing it, pick that one and risk a little more on that. You wouldn't try to do that down here, that's for sure. You would be up 500, down 500, and you lose, yeah, lots of your live trailing drawdown. It's your worst enemy if you do that with high risk. Like a smart way to do it would be, okay, I want to see the sell side being hit, so where do I have to get in to reach 5 points before we hit the sell side? Stop loss 5 points above should really be fine. You create your limit order, you manage your risks. Okay, I need a $1,500 profit target. I can use 4 micros, 4 minis, I think, with the Apex 25k count, or maybe 5. Then you eventually pass one of them. But it makes more sense using a proper setup in order to, yeah, get the account funded. And we bounce once again off the midnight level here. Take a look at NQ. NQ already made a new lower low. So we once again have SMT divergence between both. But not really a nice clean fair value gap like last time that we could use to frame a long. Just keep on digging lower with lots of volatility. Until we get relief, a nice drop or a nice pump where most of the traders jump in. And then they reverse it, having volume trapped in one direction. I'm doing very well. Can't complain. FOMC meeting minutes at 2 a.m., 11 a.m. That's 40 minutes away from now. Let me actually check that out here quickly. ApexTraderFunding.com. How many contracts you can use on the 25 for 4 minis. Okay. Similar to what we saw after the London Open, where we just chopped, faking traders out one last time before taking it lower, going back up, making it look like it's going to go long, consolidate again, continue lower, and New York opens up, and we get all this chop. So overall, I think it would be okay to assume that we're going to get a correction to the upside after hitting 4 standard deviations from the Asia range. We hit the 50% of yesterday's range. We have SMT divergence within Q right now at least. But all we do right now is barcoding. The Russell, yeah, let me take a look at it. 9:30 opened up. We took buy side, we continued lower. Out support, turn into resistance, continue lower, and then from here on we reject that, break in structure. I guess that's our previous day's low. Now the Russell actually made this entire movement on Monday, also not super spectacular comparing that to ES, but we basically saw that sell side of the curve theory on the Russell already. Let's take a look at YM. Equal highs. Yeah. If you have something better to do right now, of course you could be waiting for that opportunity once it comes up, but now might be the time to take sell side. 3 equal lows. Let's see if we can get the push below. 2 tick volume imbalance. Those are pretty rare. Okay, so we took that sell side finally. Let's see if it's a look below and fail. Trapping shorts. Take out some buy side. Or if it is an actual continuation. We close below, open with a volume imbalance below sell side. Get a nice little push back up. And Q continues to dip. So after hitting this major sell side, where really the next target would be the previous week's high, retracing all the way back into this level. Following market structure, we would expect price to continue lower from this bearish value gap right here. Retrace into it and deliver lower. Nothing I would take right now, at least. Don't feel the need to engage right now. We filled the fair value gap and rejected. We have equal lows below. This would be the trade right here. Back to the previous week's high. This red line from the ICT all-in-one indicator. It's even 10 a.m. already, so what happened at the new hourly opening? I completely missed that. Well, basically nothing. Up until now, at least. Following structure, formed a new lower low. I'd move my stop loss to break even by now. Nice close below the equal lows. Let's see, immediate rebalance coming in right here. If we continue in that bearish delivery, we really shouldn't see a close back above this 4543.75 and continue to expand lower. Like I said, stop loss to break even from our fair value gap entry ran 3 points. Bullish volume imbalance. Prefer to see that closed in immediately and continue lower. And there we go. Let's see if we can hit that previous week's low from our fair value gap entry. Weekly open is pretty far away, but yeah, it could happen. Unfortunately, without taking any proper buy side to frame a potential short setup. And there we go. We keep on continuing lower from here. So eventually, like I said, after we consolidate for long, you don't really trust much. We spotted the fair value gap, labeled the entry, but I decided to not engage. 5 points would have been hit, taking a partial off. Stop loss is already at break even. Can look for sell side further below. We hit 6 standard deviations from our Asia kill, so now the next sell side would really be at 4534. But we want to see that bearish momentum continue, and therefore we can use any of these fair value gaps that are being left behind. Frame lower prices. EU is doing the same thing, so that's lining up nicely. Let's see if we saw something decent on NQ. Took out the high. Nah. Close back below the previous week's low. Let's see what the 15-minute time frame is looking like right now. So 9:30, we spend 15, 30, 45 minutes consolidating until we get the relief at 10:15. First 15-minute candle after 10 a.m. We are below the 50% of our previous day's range now, without taking any of the buy side from the London session at all, nothing. Typical expansion day to the downside. Next sell side targets, I'd say would be the slow. We are hitting Friday's high again. Monday's high. So right here. Go back to our 1 minute time frame. Yeah, but so far not many executions from me on my funded account or on the trader account. It's just because we lack the setup. We do the tape reading, we improve our skills in that. Give a little live commentary here on the 1 minute time frame. New 5 minute candle, bullish volume imbalance. Let's see if we simply keep on going lower. Closed in the bearish volume imbalance right here. Haven't retraced back into this inefficiency. So we use that. Frame lower prices. And right here. Now having equal lows. And the reason why I didn't go short on my funded account right here is the only thing that was missing for me to to follow my guidelines, I'd say, for the funded account is that I want to see some sort of buy side taking. I want to see buy side liquidity taken before we get that displacement with the fair value gap. Otherwise, the possibility or the probability for it to be a look below sell side and revert is just too big for me. So let's say we would have taken maybe this set of equal highs right here. Or these two relative equal highs, just something. And then we move aggressively away from that and get below our lows right here. Kind of a unicorn setup, if you want to call it that. Then we get the bearish fair value gap. That's more what I like. But leaving more equal highs behind? No, not so much. We just hit the 50% of the daily range. We hit a major sell side target right here from yesterday. So it'd be more of a let's see how it works out trade. And if you think of, yeah, your trading as your business that you're running, I mean, if you're pretty chill and laid back, maybe you're like, yeah, let's just see how it works out. But that's not what I want. We still understand what price is doing here, but the probability for it to do the opposite when we're in a trade is too high for me to consider it worth the risk. Take a look at NQ. Same story here on NQ. The only time where we could have said we swept a high would have been right here. But this was too early on and we closed back below. Made a lower low, lower high, and then we just got that final sell-off without filling in any of the inefficiencies on the way to the downside. Nope. But I hope that makes sense. I like, even just for these scalping entries where I look for 5 points, Doesn't matter what happens before, but I want to see buy side swept. A little displacement. Doesn't even have to be a market structure shift, just a little break in structure, taking out a short-term low. Bearish fair value gap. Doesn't have to be at the extremes, at the high of the day, low of the day. It just has to fit my narrative. But what I want to see is that buy side being taken with the fair value gap entry right here, because in the other scenario, let's say we don't take buy side, and like we did right here, we leave these equal highs behind. We continue to nag a little bit lower, push back up. So that's what we had roughly today. Let me zoom in here. We had equal low sell side, equal high buy side. So in here we just continue to chop without taking any, even just internal liquidity. And right now we got the drop. We hit the 50% level of yesterday's range and sell side liquidity without having touched this. So for me, just common sense thinking, all right, we took out that low. We have our fair value gap right here. Of course we can enter on that, but over time, the more you test these things without having swept any buy side before, the probability is against you, because, okay, what did we do? We just swept sell side, we hit a higher time frame area of interest right here. All right, now we get the retracement, but more often than not, you see it consolidate in here and then push to the upside because it has that left behind buy side liquidity. Of course not if we're in an expansion day to the downside like today, but please tell me, how do you know that in advance? So that's what I spoke of right here. Yeah, labeling this as a short-term high take, maybe. But I want to see some sort of like, okay, pump up, dump. Or ideally, for a little bit of more risk, at the extremes like we saw yesterday at the previous week's high. We put higher highs and higher lows in place. All we did was taking buy side, buy side, buy side, buy side, buy side. Okay, we get a displacement. We have our fair value gap. So right here, I have the upper hand or an edge more than a feeling. Hope that all that makes sense. So, okay, we got our little break-in structure here. We have our inefficiency. We play around it in for a little while, and I can still manage my risk pretty well, because if I see the close back above here, well, then I think we're going to keep on going for buy side, and we don't want to take out these equal lows down here. But the fact that we have most of the time only been taking buy side gives me the, yeah, I don't know, the upper hand, I would say. 50%, 5 points. The other one would have been stopped out at break even, and then we leave that. After taking sell side, we leave behind that fair value gap, and you'll be like, no, now it has to continue lower because it hasn't taken this sell side liquidity down here. All right, but we watch it, and that's exactly what would have happened in this scenario if we wouldn't have taken that buy side before. Of course, it's not going to work out like that 10 out of 10 times, and we just see that continuation sell-off like we did today, basically. Let's go back to today. But I want to have the probability on my side. Consolidate, trap shorts. Take a look at NQ. $10.30. Basically 5 minutes of doing nothing. 5-minute inefficiency we're inside of right now. Not really here to look for a... Well, that next sell side target, we hit 6 standard deviations from the Asia expansion. Well, if we get our continuation lower to the sell side, to the New York AM session low, and the previous day's low, and our weekly open, well, could use any of these two fair value gaps to catch the continuation short if that's your bias. And you don't need that external validation for buy side being taken. We just filled in this 1 hour 1 minute fair value gap perfectly and rejected nicely. So let's see how that plays out. Pretty nicely so far. For a quick 5-point scalp. Bearish volume imbalance, that's ideal. By now I would have already moved my stop loss to break even. Already got the rejection from the area that I was looking for. We hit the 50%. No reason to let it consolidate and come back up to my entry. The only thing you really have to worry about here is your apex live trailing drawdown. Because right now you're like, depending on your contract size or risk management, you're like $250 in profit or 125, halfway to your 5-point target. And if that goes away, you actually lose these $125 off your margin, even though you then end up losing at all on that trade. Let's take a look at NQ. Similar story here on NQ. Rejection wick of the lowest fair value gap right here. Let's see if we have any questions. Message retracted. I hope you ended up taking that short. E-man. Always stick to your gut feeling. But at least also some sort of playbook guidelines. What do you want to see to go short, to go long. Trying to cover it all. Mm, 440. I'm gonna take my dog for a walk now. I'm pretty content for the New York session, so today I actually ended up losing $125 on that London session long. So it's 2.5 points down for the week after 10 points up. So overall 8 points. Not really a fan of engaging here anymore now. Like I said, I like to not perfectly catch it at the top, but I want to see the buy side being taken. Some sort of buy side at least. Otherwise, like, oh yeah, it went short today. I'm just gonna jump in with 5 contracts here, give it some little bit of room to breathe, and see if it wants to continue lower. That's also the approach of some people, and sometimes it does work out. It's just not what I use and what I don't know what I would recommend. But if it works out for you, fucking keep doing it. It's almost 11 a.m. We're about to enter into the macro. We have the FOMC meeting minutes. Let's see what happens until then. Still leaving the inventory short. Overnight, pre-market open is massively short, starting from Asia. Usually that's not what we always get. We usually always get, if we use the same example here, at least 70% of the time. London is long. Okay, we retrace at least to the 50% to stop some of these London traders out. Between the rollover time, then we expand up. If there's not enough money laying down here anymore. Well, today we had no retracement at all, if we're really being honest. Tiny little ones, but looking at the 15, only ended up being wicks. Take it as a learning lesson. Did anyone engage today? Agent, yeah, okay, Agent Smith, I know you do. Koch, day trader, Volker, Frenzy. Any trades taken today? If so, feel free to share them here for a little bit of criticism. Sometimes doesn't hurt. EU. At what time was your entry, Volker? Not trying to make an example out of you, but yeah, sometimes some criticism can help. The person you're listening to trying to learn something from. It's only telling you, oh, you did a good job, you did a good job. Well, I don't know. I wouldn't like that. I would love to have someone right next to me smacking my head in if I make mistakes, if I start to overtrade, if I don't follow my risk management. If I have someone right next to me saying, oh, Matt, you did well. I know that could happen sometimes. Like, we all have been there. Yeah, you did well. Just do it better tomorrow. Well, yeah, we talked about doing that. It's hard to punch through Discord, but you get the idea. You don't want someone to tell you, oh, you've done well, you tried the best you could. Like, that's no help. I buy a robot. 7:41. Let me take a look. 5-minute time frame, or because he said 7:41, I assumed a 1-minute time frame. 7:41. That's 9 a.m. I guess. 7:41. Which time zone is 7:41 at? Let me find out the price level first. Also for the people on YouTube, if you'd like to German time. $7:41. Mm 1.09 by 5. Entered long. 7:41. That would match up with right here, I guess. Is that correct? Look at the 5-minute time frame. Right here, bullish fair value gap, 7:45. So that should be the point. We had our market structure shift. Yep, that looks correct. I think I found it right here. You checked it off the VWAP market structure shift. I mean, more than valid. Nothing I could say that you have done wrong other than, I don't know, maybe, well, it depends on how many times out of 10 or 100 trades where you take these setups at the low of the day, where we put in a lower low, lower high, lower low, market structure shift, closed with a candle, leave behind a nice bullish share value gap, bounced off the new day opening gap. Nothing wrong on that part. I mean, the entry, perfect. The only advice I could give is maybe, like I said, depending on how many times you get something like this after your entry, you would have to go through your journal to find that out. I would say that it might, if that happens 5 out of 10 times, maybe take just 25% of the trade or 50% after you hit a certain target. You want to make sure you don't take profits too early, but at areas where it starts to make sense, like the midnight level, for example, just to make sure you get paid. You don't want to take your profit. Where are we at? We entered, or you entered right. Let's go back to the 5-minute. Right here. You don't want to get out right here. It's risk management wise. If you always, let's say, lose $500 down here, you want to make sure that your winning trade is at least, or your average win is still above 1.5 risk to reward. Well, maybe taking it out here. Got a chance to exit at this level again. I don't know, it just saving some mental capital, especially for this entire week. We move up, then you see it go down, hitting your stop loss almost, then you see it go back up, and like you're riding a roller coaster. But of course, it's not easy to tell because most of the time we just hit our buy side objective. It was fair to assume to hit these relative equal highs coming from a low of the day market structure shift. And sometimes it just doesn't play out. Let me measure out the risk reward. Well, right again, 859. Right at 1095 again. So you entered again. Let me take a look at ES here in the meantime. So ES managed to push up, closed above our bearish fair value gap, turning it into an inversion, leaving behind new bullish signs. But keep in mind that on the higher time frame, we really have a tough area to push through. Two large bearish fair value gaps, even on the 15. So to push through it, we would like to see a strong sudden move and then maybe continue up higher. Well, they wanted to, okay. That's good. I mean, basically just from your entry to the low, of course, sometimes you add a little bit down to here, but it's a 3-to-1 risk reward. That's over the long run, that's gonna work out and you make those consistent profits. You just have to make sure you actually take the profit and realize them as well. I know if I hit a 3-to-1, I'm most of the time out, or at least would label this regarding the risk to reward ratio, because we have a very small range most of the time when we get the market structure shift and place it back at the high. Let's say like right here, a much bigger stop loss, making our risk reward target very far away. But 3-to-1, I would label this as my best case scenario, where I get out with the last 50% maybe of my trade. But if I'm already at 3-to-1 and 8:30 news are coming in, not really news, but 8:30 injection of liquidity, I'm at the midnight level. Well, 3-to-1 or 4, I'd say it's just important to take some profits, not too early on. So I don't want anyone to take profit at 1-to-1 risk to reward. That doesn't make sense. Over the long run, you're just gonna screw yourself up. But everything above a 2-to-1 risk to reward, good place to take profit. Then you entered again, right here. Well, like I said, I'd base it on risk to reward because it makes it easier to, how we say that, really let your edge play out. I see what kind of approach you're using, that makes sense. Your market structure shift, your fair value gap from the low of the day, very similar to mine. But if I hit a 3-to-1 from what I risk, that's a pretty good payout to risk ratio. More than you need, I'd almost say. And especially since your, let's say, tick size or pip size stop loss was relatively small, you have the opportunity to get out earlier because, yeah, well, it already has done the job. Nice bounce here, by the way, of the inversion fair value gap for the continuation higher. We close below the bullish one right here. But with a 3-to-1 risk to reward ratio on average, even 2-to-1, to stay afloat, to not lose, you only need a 33.33% win rate. And that's obtainable, really, if we do not screw it up ourselves, I think. Really doable. 33.3% win rate with a 2-to-1. If you up that by a little bit, well, you pay 3-to-1. It's even fine if you lose 75% of your trades. It's fine. I'm saying, okay, but still most traders can't deal with losing 75% of their trades. That's the thing. Even losing half of their trades, that's where most traders fail. Well, I wouldn't say you screw it up. You still have to, yeah, well, the thing to work on would be a method to take profit, to make sure you lock in that profit. I'm not sure if you're trading with Apex or with another prop firm. I wouldn't say you screwed it up. I mean, you had the entry. All that was lacking was the exit. Lots of tiny cuts. I've been there. Just, what would my best advice be? Well, consistent many tiny cuts. Do these tiny cuts happen because you take trades that are a little bit silly, where you don't follow your overall guidelines? Or are these all tiny cuts from actually your setup that you are set out to, that you are looking forward to trade on a daily basis? That's the question. Uncertainty and FOMO, where you're just not sure if you should get in here, and then you might think it's too late and you jump in. This is where the tiny cuts happen, and we've all been there. We say we will stop doing it, and I will stop, I won't do it again, and then we end up in that same situation. I think it's really comparable to having an addiction problem, and therefore the solution is just to take it one day at a time. Try to fight it one day at a time, and eventually you're gonna get rid of that arrow. Keep on improving, keep moving forward. And once you see that stop sign where you're like, okay, you most of the time know, once you feel uncertainty or FOMO, then all you have to make sure of is to see the stop sign, see that traffic sign, and stop. Knowing you're in that state where you take all these tiny cuts and actually stop. I know it's one of the hardest things, but that's what we have to work on as traders. If your FOMO and the uncertainty that sometimes lead us to take trades ends up cutting us. Like right here, that would have been me, let's say a year ago, or maybe even, sometimes it still comes up, and then it's not the end of the world if it comes up once, maybe in the last 50 trades or something, and you're like, okay, I at least know what I'm dealing with, and I just do it better tomorrow again. It's a little setback. The only thing that you have to make sure of, it's like my uncle had a very serious drinking problem, and it's that single beer that makes the difference. So you can either you either drink nothing at all, which is super hard. It's like not placing a trade on the 1 minute time frame. It's not the easiest. I don't want to compare it to alcoholism because it's serious condition, but well, I see the similarities. So now the only way that helps is to simply force yourself to not engage, to not take that first sip, because most of the time what happens if we take that first cut, we don't stop after cut number one. Same as a recovering alcoholic wouldn't stop after the first beer. I hope that makes sense. Or is any help to anyone out there? Broke today's high. Yeah, DXY is pushing further to the upside. That's why we see EU doing exactly the opposite. Let's see if we had any kind of SMT divergence. Not really. Nope. Nothing super obvious, at least. So seeing EU at the low of the day, you can't just assume that the DXY is at the high of the day or around the high of the day. The only thing that kind of stands out is that the DXY wicked the Asia session low of the day, forming a new low of the day, while we didn't see that on the DXY, on EU. So that would basically end up being bearish SMT divergence. But it's only something that's helpful in with hindsight. Keep on pushing higher, bouncing off the 50%. That's ideally what we would like to see to frame higher prices. What's the time? It is 10:59, so let's see what we get with the new hourly candle. 5-minute inversion fair value gap. We use that as support now inside this 5-minute. That's our 50% of the range from yesterday. And Q is really not showing that strength at all that ES is bringing to the table right here. Now we have equal highs. But I think I'm going to call it a session. I'm not really keen on taking any more trades right now, at least. Yeah, I think I'm just gonna let it settle, unless we have any more questions. No trade so far, still waiting. Well, my personal time is too precious for me. I spend the time after the New York Open, usually half an hour before that, to warm up a little. But if I don't see anything that I like that lines up somehow with my playbook, I'm better off not taking that first sip or that first cut, which oftentimes ends up in 20 cuts, and then you're like, shit, all right, how did this happen from this one losing trade where I really tried to follow my rules, ending up with $500 in drawdown? I know why. And yeah, so best thing to do in this scenario is to not engage, and it's okay to not engage if your edge didn't present itself, because it's not really an edge if you, well, I don't know. Anyway, we just took these equal highs. Where's the break of structure? MSS on 5-minute ES. Tricky one, because all up here was a little consolidation. What I usually do is I use the path tool right here, coming from a nice short-term high where it used to be clean. Short-term low with a higher low to the left and a higher low to the right here. And then our next lower low we've created. It's messy and chop, that's why it's tricky. You could use it like this, lower high, lower low, and do it like this. So the market structure shift would come in right here at 4,550. But you could also say that you don't look at all this chop. This is your pullback, this is your continuation, then maybe this high. But I think it ends up being at that 4,550 level for the bullish market structure shift on the 5-minute time frame. But it's going to be outside of my kill zone. It's already 11 AM. On the 1-minute, you could frame this as your break in structure. Yeah, horrible risk to reward. Don't like that. Here's your break in structure with the fair value gap and the 1-minute inversion. After the sell-off, consolidation, reversal, 50% entry. 5 points to the upside. But anyway, an ideal prime setup would be something like this. Coming from the low of the day, small range, fair value gap, a nice entry down low. Stop loss right at the low, maybe give it one more tick. And just to the midnight, we can already target a 3-to-1. Just to that next buy side liquidity, it's already a 2.3. Those are the setups that you prefer to take. Not with a stop loss, that's all the way down here, where your 2-to-1 risk reward is all the way up here. Alright, I think, unless there are any more questions, it's gonna sum up today's New York kill zone. We're gonna see what we get at the 2 p.m. FOMC meeting minutes news. Could just stay range bound until then. But I don't know, it's still 3 hours away from that. Lots of things can happen within 3 hours. Take a look at NQ, if it's showing that same strength. No, still not really. But yeah, unless there are any more questions, I'm gonna end the stream. And call it a day. If I see something nice maybe for the PM session, I'm still around on Discord, I will share it with the members. Otherwise, yeah, if you haven't heard yet from yesterday's live stream, we currently have a last week sale for the Black Friday week with a 50% discount on our VIP membership. All the links are in the video description box below from the live stream, where you get access to our entire VIP area. If you haven't yet, make sure to also join us on Discord. I see that I just received a new ticket. Some more stuff to do. And join us on our Discord live streams without any ads or delay. Message request. Alright. Here's the discount code for the 50% offer, just so you know. And yeah, I think that's gonna sum up today's live stream.